This conference will now be recorded.
All right, so welcome to the first ever group trade evaluation class. As always, anything that we're ever going to be talking about is for educational purposes only, and nothing is intended as any type of investment advice. One thing that I did forget before we started our recording, Nitesh. Nitesh made it. He hasn't been into a traders exchange in 6 years, but he did make it to this one. But one thing I do want to let you guys know, this is going to be, it's going to always be recorded as always. But it's going to be in the under the trader for right now. It's going to be under the Traders Exchange tab within your guys' dashboards. So you'll be able to go into it. All you're going to have to do there, it's always going to be named under just the same way that this the meeting is named. It's going to be under Group Trade Evaluation. So if you type that in, I'm going to put it in the tags, and it will pop up from there. So it's going to be mixed for right this second until we have a new spot built for it. So I just wanted to point that out there. All right, so let's take a look first. So this is Chandler's, and remember, I want you guys to understand something. I'm going to pick on you. I am, because, first of all, it's a little bit of fun for me, just, entertaining. But at the same time, me just, patting you on the back is not going to help anything. That's why I did not want to have anything, any type of winning trades, because guess what? Oh, you saw this, you saw that. That's great, but I want to see what you guys are seeing. Yeah, there's no sensitivity, and please do not be afraid to put this in there. I don't care. I used to be the biggest introvert in the world. I don't care if you're an introvert. Put your trade out there. Okay, let me see it, because unless I can see what your mindset is, I can't really. Well, I mean, I can help you generally, but I can't specifically help you. All right, so we got 7-14-20 Wriggle losing trade eval. So the first thing that I want you to understand is I need a picture. All right, now obviously I'm always going to pull up the chart, and the best trade evals, guys, are always going to be the day before Wednesday, or they're going to be on Wednesday itself. All right, so I want you to understand that, just because it's the freshest in our minds, and I'm typically going to pick from those 2 days. Okay, that does not mean not to do them constantly, because you want to get in that habit, just like we talked about yesterday in Traders Exchange. A habit is a habit is a habit. Start with easier habits, but this needs to become a habit for every single trader that wants to be successful. So I'm going to need a picture. Now, this picture itself, there's a reason why it's not so great. If you went back, okay, and once again, Chandler, you're the guinea pig. You're the first person that's ever going to have this done. So I just want you to understand that I'm going to point out lots of positives, but I'm also going to rip it apart, and I'm going to give you negatives, because you do not have that template yet. So the problem is with this picture is what? The second I look at it, let's say 2 weeks from now, I look at this picture. What's the problem with it? Can't see prices, right? Okay, not only can't you see the prices, but you can't see what the volume actually was. Now, yes, you did put this right here, which is great. But at the same time, if we look over on the chart, we need this. This information is imperative. We need to know exactly, because guess what? This might be a trade that gets you, and you might keep seeing the same pattern over and over again. So you might pull this trade up, 2 months from now, a month from now, whatever the situation is. So yes, it's still fresh in our heads from what we saw yesterday, but at the same time, if you go back in a month from now, you're not going to be able to see that. So we need to see prices. We also need to see volume. It's imperative for your picture, because otherwise, when we look at this chart right now, what do we see? Now, yeah, we have print lines that show us where prices could be, but what do we actually see? We just see a chart. We can't actually see the information that comes behind the chart. So exactly, it's just literally just a trend, a chart. It's nothing. Okay, so we have to understand that that we need all the information. When you give a trade eval, okay, and let's say I do a trade eval class, you should be able to go back to it in 2 months from now and be able to know exactly what's going on. So that's the first thing. And once again, Chandler is our guinea pig. So just that's something that is imperative into to doing your trade evals, is because you need to just know the information. Okay, we have an idea, yeah, 537K on this bar right here, which we're going to get into in a second. Okay, so first I'm going to pick it apart, and then we're going to actually go over the trade. So emotions before trade. Shame. I was in the green for the day, but this trade was definitely a reach. I was not locked in and focused and was jumping around a lot instead of sticking with my game plan. The chat was on fire and I was feeling FOMO. Okay, FOMO. What place does it have in trading? None. Why doesn't it? Why does FOMO have no place in trading? Let's just break it down simple. Why does FOMO have absolutely no place in trading? Clogs logic. I like that. I love that answer, actually. It's got an emotion. That's simple. Okay, FOMO's an emotion. Guys, if I went out there to every stock that was traded in the market today, how much FOMO could I give you? You know how many trades you missed completely? You know how many trades I missed completely? I can only focus on so many things at once. So FOMO doesn't work. And the other problem that we have with FOMO is that our judge, like you said, kind of clogs your judgment to a point where now you're just keep jumping to things that are moving. But if you keep jumping to things that are moving, that's not helping you in any way whatsoever. So real quick way to get rid of FOMO. Anyone have an idea what it is? Very easy way to get rid of FOMO, or to train that, not to get rid of FOMO, because FOMO is, unfortunately, a real thing. I hate even saying it. It disgusts me because it's one of those those words. But what's an easy way? Focus on the habit of eliminating motions, of course, but see that's too general. And that's one thing that I'm going to teach you guys. And when you're doing your trade evaluations, being general does not work. Not trade for money, you're getting closer, but that's still not quite where we are, because not trading for money, once again, is kind of general. Embrace it. Allow yourself to see what you're missing and be okay with it. That's not a bad idea at all. Okay, the easiest way to get rid of FOMO, guys, is stop looking at too many things. Pick the thing, thank you, Jason. Limit your watch list. Pick exactly what you're looking at and what has the best probabilities, and don't worry about anything else. That's simple. Now, don't get me wrong. Okay, so if you have for instance, I watch, so 18, 19, 20, 20, so I watch 21 stocks at a time. So if I had FOMO and I was watching 21 stocks, what's going to happen? Well, I'm never going to trade anything, because every time something's moving, I'm going to be moving on to it. So the easiest way to get rid of FOMO is literally limit yourself to 3. Start there, because you start with 3. Then when you're okay with the 3, you move to 5. When you're okay with the 5, you move to 8, 10, 12, 15, whatever the number is going to be. But limit yourself. Understand that if a new ticker comes up, just because I post a new ticker, guys, I can trade a lot of stocks at once. And I want you to understand that none of you, not that none of you are on my level, it's just that none of you have been doing this as long as I have, because I haven't had the ATC hasn't been doing this as long as I have. So I can do these type of things, but guess what? In the beginning, I didn't look at many things because I couldn't. So what I did is I took a list. Let's say we have a list of 10 things. Does that mean you should be watching 10 things? Not a chance. Now, yeah, if you're a level 7, 8, 9, 10 trader, God, well, there's no such thing as 10 in my opinion, but God bless you. You can look at as many things as you can, because you see the trades, you'll take the trades as they happen. But one of the things, the FOMO happens because we watch too many other things. If you have 3 solid stocks from the pre-market, is there any reason to watch anything else but those 3 stocks? Nope. Okay, if you're only trading 1 stock, how many stocks do you need? How many solid stocks do you need if you're only trading 1 stock? 1 stock at a time. Just 1. That's it. So the problem for FOMO's created by seeing other people doing things. Shocks me every time when people jump around and I sit and wait for 2 to 3 to give me the opening, and it's really that simple. I personally look for 5 to 6. but I use so many as, as just because, if I have 21 stocks up, guess what I'm going to find? I'm going to find 5 or 6. Okay, but when I first started, I couldn't trade more than one stock, not even a chance. So if I can only trade one stock, do I need more than 3 solid stocks? You're also la rich. We're fishing, got to be patient. I know it's a problem of mine and I jump too much, but you have to understand, just think of the way that my mind works. My mind works in numbers. So people lie, our minds lie to us, but numbers can't lie. So if I'm only trading one stock at a time, statistically, how many stocks do I need to be watching to get that one trade? What's the number? 3. Okay, so if you're only trading one stock, you should only be looking at 3. And now keep in mind, obviously you need to have, the structure and the understanding of how to find those 3 stocks. Because if you look at 3 shitty stocks, and guess what, you're not going to make any type of trades. Okay, so you have to understand what the criteria of a solid stock looks like first. But if you can only trade one stock at a time, you should only be looking at 3. If you can, and don't get me wrong, when you get really good, there's some really great traders that only trade one stock at a time, and they put a lot of eggs in one basket. And guess what? At that point, if you want to trade 18, you don't have to listen to anything that I say anymore, because you know what? You're a high level trader and you know exactly what you're doing. But you see what I mean? So FOMO is created by too much going on at once. I want you to think of it like this. Where did FOMO come from? Let's break down psychology for a second. Where did FOMO come from? So greed, yeah, but it actually came from somewhere else. Was there FOMO in the 1960s? Ah, thank you. There's your answer. In the 1960s, was there a such thing as FOMO? Nope. Because you didn't know. If something was happening, you had no idea. Social media is what actually created FOMO. I don't know if you guys understand this. I read an interesting article probably about maybe a month ago about how FOMO started and how people literally, they're living their lives through a phone rather than actually living them. So instead of being at a concert and watching the concert, what's happening is you're posting it. And then everyone else that's not at that concert seeing that video. But guess what? If before social media existed, there was no way to know other people were at that concert unless you were with them, or unless that was your game plan, or they were friends, or you actually just think about this. Has anyone ever called on a friend before? I know some of you guys are real young, but when I was a kid, when it was time to go play stickball, I had to literally walk to my friend's house and knock on their door. What a crazy thing to even think about. But that's where actual FOMO comes from. So the way to limit FOMO, so if FOMO in your personal life, guess what? If you take yourself off social media, are you going to have FOMO anymore? Or FOMO besides the FOMO of not having social media? Nitesh still sends smoke signal. But do you see what I mean there? So the easiest way to get rid of FOMO is to, and this is a very big thing. I'm not downplaying it because it's a huge thing. But when I first started, if you guys notice, I don't have a personal social media account. Okay, I only have ATC. I don't look at that crap. I don't need to live my life through other people. I don't need to see the fake lives that are posted. And it's the same thing with stocks. Okay, if every time someone posts up a new stock and we keep jumping to that new stock, we never know what's actually going on. So the way to stop that is to limit what we see. So the same way that we just talked about social media, okay? It's to limit FOMO of personal social media, or going out social media, or whatever it is to limit the amount of social media you're looking at. So if that's the way, if that was created through social media, and the way to do that is to stop social media, it works the same way with stocks. The less that we're looking at, the less that we know that's happening. Okay, there's stocks, guys. There's probably a stock I don't even know about today that moved $20. Okay? Well, it's not going to help me by thinking about that. So FOMO, this needs to be completely taken out. This word right here needs to be taken out of every single person's vocabulary. And the way to do that is limit what you're looking at. Find 3 solid stocks. If you're going to trade 2 stocks, you need 6. If you're going to trade 3, you need 9. And obviously, you can continue to do that math. So when I see this right here, okay, so emotions before the trade, shame. Shame. From what? Shame from what? Who's the only person that can judge us? And there's one answer that, if you're a Christian, but who's the only person? Yeah, there's that's that. But who in reality? That's yourself. So there should be no such thing as shame, because if your emotions before the trade were shame, instantaneously, what should the next emotion be? Well, it might not be emotion, but your next action should be walk away. Right there. If our emotion before trade is ever shame, should we ever trade? I will judge. Duck. Nope. So right here, this first word in your evaluation says this trade should never have happened. So I know, it's funny because I rarely make bad trades. And when I do make a bad trade, it's because I basically judge the risk versus reward, and I take it because I'm willing to lose a certain amount on it that doesn't really matter that much to me. Okay, but I rarely anymore, because I have such a habit, I rarely make a bad trade. But one of the biggest things is that if I ever felt this emotion before I traded, I'd never trade in the first place. So this one word literally would take away the rest of this evaluation. Because if you start a trade feeling that way, what's the chances of it working out? And when I say the chances of it working out, I mean, what's the chances that that psychologically and mentally you're there to make a correct trade? Is it going to happen? Nope. So if this feeling ever comes, this evaluation should never happen. Mental sabotage, absolutely. But you're not going to see things clearly. You're not going to see things the way you need to, because when you go into something with an emotion like shame, what's going to end up happening is you're going to punish yourself. Okay, that by punishing yourself, I mean you're going to try to get in. So a combination of shame and FOMO literally means get the hell away from your computer for a little bit. That simple. Okay, so we can't go into a trade with anything but what? What's the only type of emotion we can have going into a trade? Or the only type of emotion we should go into? Confidence. Not neutral, because if you're neutral, that's 50-50. That's a coin flip, neutral. Confidence. If you are not confident in your, so euphoria, can't have that. Because what does euphoria do to us? Anyone ever, I don't, a girl or a guy, whatever you're into, I don't really care what it is. Anyone ever do something stupid over somebody that they were attracted to? And like I said, we're going to get real in this right now. I'm not going to sugarcoat anything. So, if you're under 17, you need a parent's consent to be able to be in here. But anyone ever do something? I'm Doug. But do you understand that? Do you see what happens when we go into something with euphoria? It literally clouds our judgment worse than going into something with shame. Because euphoria gives us those happy feelings. And when you have happy feelings, guys, are you calculated? One of the biggest things we're going to take out of these classes every single Wednesday is going to be, and like I said, I'm not putting a time limit on these. Some might take 10 minutes, some might take 2 hours. I don't care. We're going to break them down the way that they need to be broken down. Well, we're not going to go like 6 hours, but you understand what I mean. But do you see what I mean? When euphoria makes us make stupid decisions. And whatever you're attracted to or whatever, it really does come back to that, because not for nothing, guys, but when you see a stock that looks great, anyone ever get attracted to what a chart looks like? And I don't mean like, in a sense of of being attracted to a chart, but you know what I mean. That kind of came out a little bit weird, but I don't want to see but anyone on my strange addiction with charts, but you understand what I'm saying. Okay, euphoria is the worst emotion. I'd rather you go into something with shame than a euphoria, because euphoria makes you make dumb decisions. Okay, so one of the things that we have to understand, and one of the things that, when we do our trade journals, guys, I plead the when we do our journals, one of the top right of our journal is for what? Mood, right? So based off of our mood, we might see we shouldn't even be trading. Okay, emotion before the trade. I love that. This is the first thing, because this is what is actually creating the decision making in these. The green is, and we'll get to that in a second, but the green is the entry and the red is the exit. So the emotion before the trade created this trade. So at the end of the day, what should we do? What do we have to do? I want you to think of it like a jury. When a jury sits down to go over a court case, what are they told to do? Anyone been on jury duty before? So emotionless, Andy, is somewhat impossible. Now, I can do it, but it took me a long time, and it's going to take a lot of you a long. See, that's the thing, impartial. That's the perfect word, Tracy. When we go into a trade, we have to be impartial, because anything can happen, but we have to examine the facts and then gain confidence from the facts, or variables that we call them, to go into it. But we have to be impartial. We have to basically just go into this trade with a clean slate. How many people have seen such a perfect trade, got into the trade before, and then all of a sudden a ton of selling came in and barred them down? It's going to happen. It's part of trading. We've all been there. If you haven't been there yet, you'll get there at some point. But we have to be impartial going into here. So if we start feeling, shame is a huge emotion. Okay, so let's break down some different emotions. Confidence is also a bad emotion sometimes. Why is confidence a bad emotion for us sometimes? It's biased. Absolutely. If you're confident in something happened, it's completely biased. Okay, so what happens is, when you're biased on a decision, are you willing to accept when it shows you that you're not correct, that your bias is incorrect? No, but so the answer is no. Exactly. Ego becomes attached to the bias. And we're going to, like, these things, when we go, the biggest part of our trade evaluations is psychology, because 90% of the time, the emotions before the trade will tell you exactly. I could have read this right here, and I didn't need to know it was a losing trade evaluation, but I could have read this right here and told you the trade was going to be a loser. Now, you could get lucky every once in a while, but guess what? Being lucky is not being consistent, and no one's ever going to be a consistent, profitable trader that's getting lucky coming into it. So we have to understand there's certain emotions that if we feel, I don't care if the stock moves $50, can't take it. Ego, terrible emotion. Terrible emotion. We have to go into things biased to an extent, because you would never take a trade if you were never, if you were completely unbiased. Obviously, you have to have confidence in the information that you saw. But at the same time, we have to understand that anything could happen. Who here is afraid of being wrong? I'm going to give you a little story. Anyone here afraid of being wrong? And I don't care if it's just trading, if it's anything in life. Yep, truthfully, I'm same guy right here. If I said I wasn't, then I'd be blatantly lying to you. Now, when I say afraid, my afraid level has gone down a ton, but it's still there. So when I first started trading, I want to tell you guys something. I used to get into relationship fights because I lost paper trading. Now, the paper trading itself had nothing to do with my financial situation, had nothing to do with anything, but I was so upset with myself that I was wrong that it ruined days of mine. And that was paper trading. Okay, do you think that was beneficial for me in any way whatsoever? Because if you're always afraid of being wrong, can you ever really trust yourself in any way? Embrace it. Okay. Every day you wake up to trade, if you make enough trades, are you going to be wrong? I'm wrong at least once a day. And that's putting it nicely. But I know every morning that I wake up, I'm going to be wrong. So guess what? I've accepted it. And acceptance is a huge part. I feel like we're almost sitting in like, an AA meeting or something like that, but the emotions are still the same. Okay, you have to understand something. You're going to be wrong. It's going to happen. 1,000,000%, it's gonna happen. You're going to be wrong. There's no such thing as 100% trader. Does not exist. And you know what? It might exist if you sat there and took 99% trades every single time, but you'd be wasting your time and you wouldn't be maximizing what you can actually do. So the emotions before the trade. Okay, this is something that you guys should write down before you even think about trading. Because if the word shame comes up, should you take that trade? Well, see, Jason, that's the thing. So you have to trust that you'll be right, game of percentages. But in order to trust that you'll be right, you have to accept being wrong. And I know that's a hard thing for people to understand, but you have to accept being wrong. Guys, being wrong, is it a big deal if you cut your losers? Why is cutting your losers the most important part of trading? Because we're going to be wrong. So we can't let those losers take away all of our winners and all the things that we were correct on. So cutting our losers allows us to be wrong coming in. So if we have a word like shame, FOMO, uncertainty, any type of emotion that is kind of wish-washy, and that's just for a lack of a better word, guess what? That probably isn't the trade that we should take. And if that happens, I'm going to tell you how I overcame this. So when I was wish-washy, because once again, lack of a better word, and my vocabulary is not that great, what do you think I did? I didn't just not take the trade, but I looked for more variables. Because is it possible to not be sure of yourself when you have 57 variables going in the right direction? No. So if I had that emotion, I looked for more variables. So if let's say I take a 70% trade. Okay, so the variables told me that this trade is going to be 70%, and I got FOMO, I got shame, I got every other emotion that comes in that's non-beneficial to us within our trading. What I do is I'd find things to make it 90%. And if it didn't give me the 90%, didn't take the trade. That's simple. So this is something that has to be done mentally. Okay, how many of you guys know the rules pretty well for trading? How many of you guys know, to an extent, exactly what's going to happen? Pretty well, right? Would say so. Back of my hand, David, and without a doubt. Okay, so you'd say so. Okay, so what's the only thing that would hold you back? It's not knowing how to trade. It's what? Psychology, your own brain. It's amazing. Your brain controls everything and gives you the ability to live, but it also screws you constantly. It is what it is. So we have to figure out how our brain's screwing us and fix it. So these little tips and tricks are the things that are going to help you stop your brain from screwing you. It's all, if you know how to trade, most of the problems in your trading are going to be just mental, just things that you did that you know you shouldn't have done. And when you cut those things out, now you're just in percentages. That's the biggest problem with understanding your real percentages, because a computer can give you, an algorithm can give you just a complete percentage of exactly what happens because it doesn't think. We think. Should we think when we trade? Should we ever think? Should there be any thinking involved? Nope. We should analyze, but we should not think. Because we think something's going to happen doesn't mean it's going to happen. Okay. But when we get percentages of what's being shown and tells us it's going to happen, there's no thought involved. Guys, right now, if let's say, I don't know, let me pick a stock. Let's just say mRNA. Right now it's 79.50. If we get huge bids at 79.50, there's no thought process. Our rules say it needs to pull up and then go down. So those huge bids tell us that we're going to have a pretty decent trade for at least 50 cents towards the upside. There's no thinking involved in that. When we think, we get in trouble. I don't think anything. I just go by what I'm shown, because we don't control the stocks. They do. They allow us to make money. Remember, there's two situations. Either they're taking our money so they can make more, or they're allowing us to make money to use us to get the stock going. All right, how to avoid this next time. Be more aware of my level of trading and my overall game plan for the entire day. Stop comparing myself to others and focus on where I am, where I want to be, and the steps necessary to get there. So this is an interesting one. And once again, the psychology is like my favorite thing in the entire world. I love the human brain. But I want you to understand something. Is there any comparison within traders in the market? Is there a real way to actually compare traders in the market? Think about that for a second, then give me an answer. Is there a way to do that? I envision like smoke coming out of everyone's head right now. That's it. Everyone has different circumstances. One trader is not the same as the next trader, 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 as the next trader. At the end of the day, guys, I know we're not supposed to think this way, but why do we trade? Besides, it's just so much fun. But why do we actually trade? Money, freedom. But the money brings the freedom. So at the end of the day, it's really money when you actually think about it. Is somebody else making money going to pay your bills? It's my favorite, the thing to think about. But anyone ever like get a real good day and just send you a check to pay your bills? So everyone's circumstance is different. So what others do mean nothing. Absolutely nothing. Now, don't get me wrong. Okay, others, giving advice and showing, that their mindset. Doug breaks down a set at least, at 5 trading days of the week, if at least 5 stocks are going to be broken down at some point to give to you. That's great. But guess what? You're not Doug. You haven't been trading for the same amount of time as Doug. You haven't put the work in that Doug has. You have it's just different. So we have to understand that our trading has nothing to do with anyone else. Absolutely nothing. And one of the things is that we get caught up in I want to say 9 to 5. Because most of our parents, I know, for instance, mine, they work 9 to 5 jobs. Okay, so you're compared to somebody at your exact position. Are there positions of traders? Is there a, I don't know, administrative trader? Is there a, I don't know, executive trader? Or is there, no, there's no such thing as that. So you technically are building yourself in a completely different way that anybody else is going to. Now, yes, we use the same methodology, but you have to understand what goes on with other people means nothing. I don't want you to use it as motivation. Okay, do not allow it to give FOMO. Okay, let's say I made 100 grand today. How many of you guys want to make 100 grand today? Of course, everyone wants to make 100 grand today. I mean, if you didn't, then there might be something wrong with you, and you might need to look at some help rather than me teaching you, because I'm not going to be able to help you. But of course, everybody wants to make 100 grand. But is everyone here in a position to make 100 grand today? No, of course not. So looking at other traders is a great tool for motivation to get yourself to become a better trader. It doesn't mean because someone made 100 grand that you just go out there and start clicking buttons. Doesn't work that way. Because one of the chat room is so important, and at the same time, to some people, it actually hurts a little bit because they get caught up in what they're seeing other traders doing, and they expect that they should do that. And I use Doug as an example because Doug's, one of the best traders that we have here. But, hey, if I wanted to pick on Doug, I could tell you guys some stories. Wasn't always this way. He always wanted it to be this way, but it wasn't. I'm sorry for throwing you under the bus, but got to use you as an example. But it wasn't always that way. Do you understand? So guess what? Right now, yeah, so it's something to strive towards, but it took a long time to get there. And most of and to be completely honest with you, it's mostly because he was trying to be something that he just wasn't at the level to be yet. When you have certain people that want perfection. So what happens is that when they see others reaching perfection, they get mad at themselves. And that's a completely normal human nature for somebody that's successful in their lives. So that's a hard thing to get over, but you have to understand that because everyone else is doing something doesn't mean that you need to be doing that. I might make $5 on a trade, but guess what? If you're in the beginning stages and you only made $1, that's phenomenal because you can build off of that. So one of the things, how to avoid this next time, okay, I would have just put this into one sentence, is understand I'm on my own journey. My ability to succeed in this is going to be set by me. There's no one else that you can compare it to, because guess what? How many variables are different for every person that's in this chat room, every person that's in this class right now? Does anyone align with the exact same variables? Same amount of money, came from the same place, had the same family, had the same. No, it's literally it's infinite, the amount of different variables that go into each person. So you have to know the phrase, know thyself. Don't worry about other people, because once you start worrying about other people, what you're trying to do is you're trying to be somebody else. And if you try to be somebody else, you're not doing what you're capable of. So be more aware of my level of trading, my overall game plan the entire day. Stop comparing myself to others and focus on where I am. And this is the most important part of my level of trading and my overall game plan. It's not Doug's overall game plan. It's not Nitesh. It's not Donna's. Not anyone else's. Okay? It's what my game plan is. Because my game plan, guys, might be to make $1 million today. Should that be your game plan just because it's mine? Some of the best traders I've ever trained, and his name is long time ago, but his name is Keith. Okay, his game plan, because he had a lot of money, had very successful business. He actually lived in Canada. Okay, and his game plan was to make $250 a day. That was it, because it wasn't as much as making money for him, because he had plenty of money. It was based off of the fact that he just wanted to do this. It was just a little hobby for him. That was his game plan. Great trader, could have turned into huge, but he didn't want that. It didn't fit him, so he didn't do it. But I'll tell you one thing, 9:30 would hit. By 9:45, he was done for the day, every single day. Great trader, very, just followed everything like a computer, and he had found success in his other life, and in his businesses and stuff like this. But he just wanted to retire. I just want to make $250 a day. Absolutely nothing. Oh, I don't want to put down $250 a day. It's like 50 grand, but at the end of the day, that's what he wanted to do. But if he tried to start following other people's game plans, do you think he would have been as good a trader as he was? So how to avoid this next time? Follow your game plan. Make a plan and work it. But the other part of this is that what happens when we hit our human nature? Okay, what happens when we hit our plan and when we accomplish our goal? What does human nature make us do? It's a big part of the brain. Yeah, because now we hit it and now we're not okay with it. But one of the biggest, one of the biggest steps that I took as being a trader myself was the fact that when I set my goal for the day, when I hit it, I was okay with it. Now, I wasn't always. It took me a long time to get there. But let's just say, let's make up a number. Let's say $2,000. Let's say my goal was to make $2,000 that day. When I hit $2,000, I understood I accomplished my game plan because that's what I wanted from the beginning. What happens is that we go out there and we try to start and just extend what we were going to be like. To a goal means that it's something that's the top. We want to be able to hit that. If we're a little bit under, that's okay, but we really want to hit that goal. So what happens is if you want $2,000 for that day and then you hit $2,000, what do normal people do? When I say normal, it's because it's human nature. What do normal people end up doing? They hit that 2,000. Are they as calculated as they were to get to that 2,000? Or do all of a sudden they start doing dumb things because they're up of some money and they decide that I'm going to just take stupid shit. Best way I could put it. And then we give it back. That's what happens. So understand a game plan is set. Now, guess what? A goal should never be something that's too easy to attain, but it should never be something that's too hard to attain either. So we have to understand going into our day, if $2,000 was our number and we hit 2,000, guess what? Now we should be even more conservative because keep your money. But human nature tells us that we need to push and push and push. And when we start to push, our minds start to get less focused and we start doing things that we should not. All right, let's start talking about our trade. So first of all, and like I said, right now, we're going to give you the template this week, so I'm not going to go over this, but game plan. Okay, this is the game plan should be one of the first things that come up after that. So emotions and how to avoid this next time should be at the bottom, but we'll get there. All right. So a game plan, 4 was hit on the ask multiple times. The buying for 450 was there, and I knew 5 would act as a magnet. My first price target was 450 with a stop loss of 360. Okay. So entry was at 378. 360 stop loss, okay with that. Let's go to a chart for a second. What's the problem here, guys? So simple. Sideways. But not only sideways, what do we notice about the what do we notice about the volume here? Do we have a trigger anywhere? We don't. And a stock, if this was building to then go high, because you got to remember, if we had the prints up here and building started in this consolidation, when the time to release came in, would we have to look for it, or would it be so damn obvious that no one could miss it? Because 537K means nothing if it's just trading that. You see? See, our volume's going down, 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 down. Remember, don't forget to use this line, guys. This is what the average is. So when we see a steady decrease, okay, there's 2 situations there. Number 1 situation is the stock just sits in consolidation and continues in this volume pattern. Doesn't really change. What's the other situation? And that's the only one that we could possibly take a trade out of the stock with. What's the other one? Clear and concise trigger. We're talking about, guys, and now obviously, this is 537, so, we're going to have to, kind of guess a little bit. But it's going to be somewhere up here. Because look at the move that was made. So in order for it to make this move, guys, we're going to need volume similar to what the move was. So if it's sitting there clear and concise, is it actually a trigger? I see you guys call out these things on these cheaper stocks all the time. It happened earlier, and Gene, of course, is just running. But what stock was it this morning that I saw? Give me 1 second. Not seeing. I forget which one it was. Okay, but if we come over and we look at, let's just look at CANF right now. Okay, there's a few points in here. It looked like the stock was going to jump, right? So I see you guys call this out all the time on cheaper stocks, a huge downtrend, but it gives a little bit of a bar up, and you guys call it out. Guys, is there any trade here? Is there anything here that shows us that this stock could break out and get back up to where it was during the pre-market? No, not even close. But I see that all the time. So just because a stock gets a move up like this, because in a downtrend, that's almost never a trade in a cheaper stock. It needs to hold some type of level. It needs to be into some type of deal. So when we look at this, really, it's such an easy look. Is that the emotions before the trade are what caused this to happen, because you didn't want to miss it, but you didn't get anything. Another thing. If we want to trade in a consolidation, what do we need in order to make it a high percentage trade? What do we need? A stock that's a breakout, a stock that's in a consolidation. If it's going to break out, will the bar not break out of the consolidation ever? Almost always. So if you trade in the consolidation, what you're doing is you're asking to be shaken out. That simple. Because it always, if this stock is running back up to here, guys, this bar is going to break out of this consolidation. So technically, we don't have the number here, okay? But let's call it, I don't know, 413. So let's go 420-ish in that area. But this bar would break out past this consolidation right here, and then immediately following afterwards, the volume would wax to then break out above here. That's the only way we're getting a breakout trade in here. Otherwise, what you're taking is nothing. There's no possibility here, is what it comes down to. There's nothing there. Okay, so exit at 360, which, your game plan coming into it says 360. So that I love. So when you have a trade like this, okay, and you took, yes, it is an 18-cent drop, okay, which is, unfortunately, that's a little bit much, because going up to 450, taking the stock at 378, doesn't even technically have $1. So that is a little bit more than I would be willing to lose on a trade like this, especially if you take a trade, and I want you to understand this. If you take a trade and then you think it's a trigger, you think it's a release point, and it goes right immediately back into consolidation, what percentage do you think you have a chance of that trade working out? Think it's high or low? Oh, it's so extremely low. Remember, we take trades because they're released. If we think they're going to be released and we take it and it does not get released and it goes back into consolidation, okay? Have you guys heard of the 10-second rule? I've talked to you guys, we're in classes and stuff like that, but does everyone know what the 10-second rule is? Some people still use 30 seconds. I think 30 seconds to me is just way too long, because that means that you didn't really have your timing correct. But basically what 10-second rule means is that if you take a trade and you're not in the profit and the stock is not moving in your direction within 10 seconds, you made the wrong decision. Now, yeah, of course, there's situations where the stock will go up, but there's not many. All right, so use that. If you take a trade and you're not making money almost instantaneously, you probably did something wrong. So what do we do in that situation? Do we just get out of the trade? Yeah, take off exposure, number one. And then number two, understand that we might lose money. Okay, even if you're up 5 cents, is it worth it to let it drop to your stop if you know the stock's not going to go up anymore? No, that's just giving away money for no reason. So use that within it. But when you look at this chart, you got, I use the term sexy charts everyone, so often. It's because I like a chart that's sexy. It's that simple. It looks good. It looks like it has the ability. Does anybody look at this and say breakout moment? Sometimes you got to just look at it just quick and just see, no, there's nothing here. It's just sitting in consolidation. All the bars are the same. We're not getting any type of bigger bars. And for a stock to run back up, be able to break this print line, the congestion at this print line, break the orb line, to get back up here, guys, what would the bar look like? You have to understand that. We have to understand every single possibility of what a stock can do, and there's not that many, because if this stock broke out, guys, I could draw it for you right this second, because I've seen it a billion times. I know exactly what it would look like. Okay, the bar would be huge to be able to go out, because it would be a release time. Why would the bar be huge? What's the psychology of trading behind that? Why would the bar have to be huge? Very simple answer. Everyone should know this. Well, not everybody, depending on how long you've been here. Most of you should, though. Because they have to get it far away. Yeah, but not really. To get more of a reaction than me. Guys, how do they get retail to help them push a stock to where they want it to go? Price action, right? So in any way whatsoever, would we have normal price action if they wanted the stock to start going? Or would they show a big bar of price action to the upside to get retail to start following it in to push for them? Create movement. That's exactly it. So we know in this situation, in order for the stock to get back up towards these highs, that has to happen. There's no other option. So if we don't see that and we take a trade, gamble. Complete guess. We have no idea what's going to happen. Could it work? Statistically speaking, not going to happen. Does everyone understand that? Remember, we need to be able to draw the chart in our head of what it would take in order for the stock to do exactly what we want it to. And the reason that our triggers are price action and volume is because price action and volume is what creates retail to get in. Two situations: they either taking money from us or they're using us to help them make their money. So in order to use us to help them make their money, they have to create that price action and volume. Is it there? Not even close, right? So when we break down this trade, Chandler, what was in your head? Well, I wanted it to happen. Wanting and showing are two different things. Did it show it was going to happen? No, not even close. Not even like remotely close. I can't even find a positive out of it, to be completely honest with you. But they didn't show it. So you wanted it to, but never showed anything remotely close to it. So we have to understand that. We have to know that if we're going to come out of this consolidation, psychologically, there's only two things that a market makers do to us. So we know that in order to use us to make this happen, the bar's got to be big. Because I want you to break yourself down to a retail trader right now. Look at this chart. Would this excite a retail trader in any way whatsoever? Not even close, right? So if they didn't excite a retail trader to use them to push the stock where they want it to be, are they pushing the stock where they want it to be? Nope. Not a chance. There, a new 5 would act as a magnet. Now, we also have to look at the price. Okay, this is a $4, at this point, I'm not sure, what it was, but, oh, no, I know exactly what it was. A $3.78 stock as it was coming back in. Good. in any way whatsoever is a $3.78 stock. How far away technically is 5? Yeah, it's a long way away from where we are. So could we even in any way whatsoever use 5 in our game plan for this? Or should, I mean, better question is, should we in any way now, if it gets towards 450, guess what? Okay, that's okay. But you're talking about $3.78. Okay, that's a dollar, 22 away. That's a huge amount for a $3.78 stock, isn't it? Remember, we're spoiled to a certain extent, but think about $1 in a $3 stock as a huge amount. So that variable can't even be used. So 5 would act as a magnet. That's great. 5 would act as a magnet as we got closer to 450, 470, somewhere in that area. But we have to take that out. So if you take this away and you take the 5 would act as a magnet, my first price target was 450, which is stop loss of 3. But this part not even there. So it's a variable that actually isn't a variable. You see that? Because that's a habit that a lot of us might get into, is that we want to see something there that really isn't, but it's so far away compared to the price of the stock that we can't use it. So if you take this out, okay, basically all you have was 4 was hit on the S multiple times. The buying for 450 was there. That's it. That's all you have. So you don't have a trigger. You don't have the 5 acting as a magnet. You really don't have any variables. So reflection, the time of day, my entry was much lower volume, gave me a low percentage chance of getting to my price target with the amount of congestion that was above orb line at 386 and print line at 439. So time of day, let's go back up here. Can't see. So make sure that you're including your time of day into your chart as well. But when you look at the time of the day, did the time of the day have anything to do with what it looked like? Because the time, yes, time of day, you're absolutely right, but does it really have anything to do with what went on here? So time of day wasn't the problem. It was the trade that was the problem. Because how many times, guys, at like 12:30 or 1 o'clock, we get these amazing trades that come out. But in order for it to be an amazing trade, our volume was going to have to be somewhere on this level, somewhere up here. So in the millions, somewhere to show. Yeah, so they come with volume, but there was just nothing there. So you can't blame this on time of day. Well, so you can blame it on time of day because it showed you that there was just nothing going on. But the time of the chart itself showed that, because the reason I say this is because time of day, even if if it got a trigger with the big enough volume, the time of day, I would take that trade all day long, because you're right. There was enough stuff there. There's enough variables there from earlier. Someone's going nuts. Yeah, so there was enough there where if we got the trigger, guess what? There was enough buying up here that we could have went with it. But unfortunately, it just never showed there. So we can't use time of day there. Target with the amount of congestion. A more acceptable entry would have been at least 1 million. See, there we go. A more acceptable entry would have been at least 1 million in volume to break above the orb line with waxing volume to show it could hold. That on point. No question whatsoever there. And a real trigger. I mean, that's really what it hit. A real trigger is basically what this says. So my actual stop loss should have been 369, which was at the bottom of the bar that I took my entry in. And so I was going to say your entry, because of the amount the ability that it had to move, your entry should have been, but you're talking about 9 cents. It's okay. I'm not too upset about that part of it, but you're definitely right. You should have had a tighter stop, especially because if you were going to take that position, now I've taken positions like that before. What would we call that? What should it have been? Starts with an F, ends with an eeler. There we go, feeler. So if you're gonna take that shot and you're willing to lose, got to be a feeler. It can't be a regular position because it's just. And first of all, that's not even a feeler because there's just nothing there. You're trying to make something out of nothing. They did not show you anything. There was nothing there. There was just nothing there, guys. I'm going to give you something real quick. If you called out this stock in this situation, what would I say to you? Okay, so let's say this was the pre-market and this is what it looked like. What would I say to you? Take a walk, get out. So I am gonna go hard on you guys in this stuff, but I wouldn't tell you to get out. But I would be like, get the hell out of here. It's nothing. It's not showing us anything. We have nothing to go on. There's just not. It's not trading. Better things to focus on. So use that as kind of a litmus test for yourself and say, okay, I'm looking at this chart, and the chart alone should tell you whether or not I'm going to yell at you. There's just nothing here. There's nothing. When I look at this, it disgusts me just looking at the chart because it's just a shitty consolidation. There's just nothing there. Okay, in order for me to even think about this, remember, would need that big bar volume, real nice trigger to show us to actually want retail traders to come in and do something with it. Low percent chance of getting my price target. So my actual stop loss, okay. So what did you do right? Cut my loser, although it should have been sooner, and 100%. I'm on point with this. When when I first started trading, the biggest detriment to my trading was allowing losers to run against me. Okay, at the end of the day, I want you guys all to understand something. If you cut your trade at your stop loss mentally, is it ever a losing trade? Ever. That's it. Got shaken out. Now this was, for once again, lack of a better term, Chandler, shitty trade. I'm going to be completely honest with you, but that makes it a positive trade. Cutting, I can't reiterate this enough to you guys. The key to trading is cutting your losers where you need to. So yeah, could you have done it 8 more cents? Nah, but you know what? You made your game plan and you followed it. That's the big light that comes out of this trade. Okay, the fact that you took it the second it came to the point you said you were going to get out of it is a huge. So many traders they're so good at trading, but they fail because they leave these things in. They leave their trades going even though they know it was stupid in the first place. Okay, so even though this trade was not good, and once again, I know I'm picking on you, but I'm not going to, it is what it is. This needs to happen. I wish somebody would have done this for me instead of me doing it to myself. But at the same time, that part right there is such a huge positive. Because one of the biggest things, if you guys notice what he said here, is that although I should have been sooner, when I first started trading, my biggest detriment to my trading was allowing losers to run against me just because there was buying above. Okay, so this right there shows the growth in your trading, because guess what, guys? Are we going to take some things, and I'm not going to call them stupid trades. This was a stupid trade. Okay, but let's just be, put things black and white. But at the end of the day, are we going to, when we get better and better as traders, take shots on things that don't have the best percentages, but there's some feel there. There's some things that go on that kind of give us this feeling, similar to what I was talking about yesterday. I forget the ticker. I believe it was PRCP. I just had the feeling that it was going to run, but guess what? I took a shot at it. Okay, but at the end of the day, the shot you take can only go so far. So that doesn't mean if you take a shot, you let it go. So right there, that alone just shows you that you will be successful when you cut out the stupid shit. Okay, so like I said, this is not, this is over 18 or whatever the hell the movies call it. So I'm probably going to curse a lot more as we go on into this. And and we go there. But that right there, that's just such a huge light at the end of the tunnel. Anyone ever make a really shitty trade and hold it for an even shittier trade? Oh, Lord, I've been there. Ugh. How much worse does it make it? How much worse does it make what happened? Because you might lose 20 cents, but then you let it go $1, and then you let it go, and then all of a sudden now it's your main focus. It takes you away from all your trade. It destroys everything. So Chandler, that right in itself is just such a light into where you're going to be. Because if you can continuously do that forever, no matter what, the number comes, the number's out. I don't care if it goes back $50 afterwards. That right there is the key to trading. Now, obviously, you need to understand how to trade and not take dumb trades, but that's huge. So what I did right, you're 100%. And guess what? Should doing this correctly ever not be in a losing trade evaluation? Should every losing trade evaluation ever have, what did I do right? I cut my loser. It's imperative to your success. Every single losing trade, what I did right, okay, just right, cut my loser. Now, yes, you went a little bit more in depth, and as you get more advanced, that's it, cut my loser. Because we can make as many shitty trades as we want if we cut our losers, guys. How hard is it to make a 50-cent trade? Because I bet you Chandler, as he said, he was in the green already. He knows that he, makes good trades. So as long as you cut your losers, you're not going to get devastated. You're not going to blow up an account. You're not going to quit trading. Okay. The reason people quit trading is because they're stupid and they do not understand the sole fact of being a successful trader is cutting our losers. What did you do wrong? Was reaching and wanted the market to do what I was expecting now instead of waiting for me to tell me it's time. The volume never said it was time. Yep. And everything that we just talked about. And lessons for next trade. When making a game plan, make sure you lay out every possibility and how you will react. What kind of setup and volume do you need to take a trade? And that's exactly what we talked about before. When we come up to this chart, we have to envision what a perfect trade looks like. We have to know what a shitty trade looks like. We have to know every aspect of what could happen based off of previous experience. So in order for this trade to actually run, guys, what's the number one thing? What did it need to do? You took nothing out of this class besides this. What had to happen? In order for this to even be close to having a chance of being a successful trade, what had to happen? That's it. That's the right trigger. A trigger that was obvious and followed by more volume. Because you got to remember something. On a stock like this, especially when you talked about the time frame, we could get a great bar. But if there's no time and sales speed stops after that big bar, what's going to end up happening? So I'm going to take that big bar 10 times out of 10. But we have to also understand something, is that if the stock stops trading after that big bar, is it going on a run? Time and sales speed just basically dies. Is it going to go on a run? Nope, it's not going to. So Chandler, I know you were the first kind of guinea pig coming into this. And like I said, Dave's going to, we're going to have a template for you guys for exactly what I'm looking for. I would have liked to see, one of the things that I would have liked to see a lot more, talk about the prints up here. Because remember, your trade evaluation, you should be able to go back 6 months from now and know every single aspect of what happened based off of what you wrote here. If you don't have that, this becomes useless 6 months from now. You can't ever go over your later trades and really kind of develop yourself from there. Okay, so that's a big point. You need to make sure you know what the times were. You need to make sure you know what the volume was. You need to make sure you know what the prices were. And basically every aspect of everything that you need. Okay, but I'm going to leave it on this. This was very positive. And the reason it was very positive was what? Why was this such a positive trade? That's it right here. This highlighted. Because guess what? Sometimes we might make a stupid trade. If we cut my loser, cut our loser, it's okay. Because the next one we can do better on, and we don't have to make up for a detrimental loss. So Chandler, honestly, really shitty trade, but overall great evaluation. And I think, based off of all, I'm just playing with you. Well, not really at all, but just you know exactly what you did. That simple. So you know exactly where you need to go, and you're not going to make this mistake again because I just spent, it's at 150 already. So I basically just spent, an hour and 20 minutes ripping you apart. So I promise you're not going to make it again. But as long as you cut those losers, Chandler, you're gonna be fine. You're gonna be fine because you can. Yeah, So the thing is I'm going to pick trade evaluations where people don't know what's happening, and we're going to, as we grow and we continue to build what this class is going to be, we're going to go into that. But overall, I'm not going to give you an A plus, but I'm going to give you an A, and then I'm going to drop it down to like a B minus because of the trade itself. But I'm just kidding. Guys, any questions? Especially Chandler, any questions? Thank you, Chandler, for being the sacrificial lamb. All right, guys, I'll talk to everybody in the chat, and happy trading.